Hello, everyone. Thank you for joining today's webinar. This is the Connecticut Green Bank's Spring Quarterly Update webinar. My name is Rudy Stirk, the Associate Director of Marketing and Communications for the Green Bank. And we're very excited and happy to have you here today with us on our Day After Earth Day webinar. So a couple of quick housekeeping items before we start. We are recording today's session. And as always, we will send out a follow-up email afterward to everyone who registered for this session with links to the recording and other resources that we mentioned during the presentation. That email should go out by the end of this week. Please feel free to share that information with anyone else who is interested or wasn't able to join today. We will jump into our organizational updates first, and then we will go into our solution lines and give some program level updates. At the end, we will have time for questions and answers. So please, as we go through today, feel free to put your questions into the question box on the GoToWebinar, and we will do our best to answer them at the end. If there are questions that we don't get to or don't answer or can't answer in the moment, we will do our best to follow up with you after the fact, of course. So with that all said, I am now going to turn this over to Green Bank President and CEO, Brian Garcia.
All right. Thank you for that welcome, Rudy, and happy Day After Earth Day, everyone. It's good to be with you today. So let me start off with the mission and vision of the Connecticut Green Bank for some of our new audience members. So we are the nation's first state-level green bank. As an act of public policy in July of 2011, specifically Public Act 1180, Section 99 of that act, the Connecticut Green Bank was formed. Our mission is to confront climate change. That is to say we want to enable the reduction of greenhouse gas emissions, as well as increasing our resilience against the impacts of climate. So to confront climate change by increasing and accelerating investment. Investment is a really important input into our approach, public and private investment. The more public and private investment we get more benefits in our communities, more resilient, healthier, and equitable communities. We want to make sure that the capital that we're attracting, the investment that we're attracting helps families and businesses, especially within our vulnerable communities here in the state of Connecticut. That's a little background. Let's go to the next slide, Rudy. I will come back to our vision statement at the end. But just in terms of the goals that we have as an organization, I alluded to this in our mission, but our goal is to use a little bit of public funds to mobilize and unlock multiples of private investment in our state's green economy. Again, the more investment we get in the green economy, especially in underinvested communities, our vulnerable communities, the more benefits we're able to unlock for our communities. We want to strengthen Connecticut's communities, especially vulnerable communities, so that they can realize the benefits of the clean energy economy that we're building and making these clean energy technologies and environmental infrastructure projects more affordable and accessible to individuals, families, and businesses. If we succeed there, then we will be advancing market transformation and enabling our capital markets to be devoting a significant amount of capital to help us confront climate change. And you'll hear over the course of today, in any future quarterly webinars and past webinars, how our Green Bank team, working with contractors, capital providers, customers, communities out and about throughout Connecticut, are helping to enable that investment. Let's go to the next slide. So we are coming off of our Earth Day month. You know, this is our, I think the 54th annual Earth Day. So we're just coming from that. So I wanted to start off with just talking about the Greenhouse Gas Reduction Fund. You've heard us talk about this in the past, but just a big celebration to, you know, August 16th of 2022, which is the signing date of the Inflation Reduction Act. I don't know where all of you were on the 27th of July, 2022, but I remember where I was when I got the first notice that Senator Manchin and Senator Schumer had reached agreement on the Build Back Better, which was ultimately going to result in the signing of the Inflation Reduction Act several weeks later. We're all seeing the opportunities presented by the Inflation Reduction Act, the investment tax credits in a variety of clean energy sectors, from renewable energy, energy efficiency, battery storage, to new industries like hydrogen, carbon capture, sequestration, clean manufacturing. So there's a number of opportunities for states to be enabling more investment in their economies through the Inflation Reduction Act. But specifically, I want to give a big shout out to Section 134A, which is part of the Clean Air Act, which creates a $27 billion greenhouse gas reduction fund. On April 4th of this month, Vice President Harris, along with EPA Administrator Regan, announced the awardees for the National Clean Investment Fund, which was the $14 billion of GGRF resources to capitalize up to 3 national organizations, as well as the Clean Communities Investment Accelerator, 5 recipients of this accelerator that would support community lenders across the country. We are a happy and proud partner with the Coalition for Green Capital, which was the winner of the $5 billion National Clean Investment Fund. The Green Coalition for Green Capital support of local, state green banks across the country, and enabling more capitals to flow through those green banks. So we're very much looking forward to partnering with CGC, all our sub-awardee partners, and other state and local green banks to advance that mission. We're also a partner with the Justice Climate Fund, which was a $900 million winner in the Clean Communities Investment Accelerator. CCIA is all about trying to unlock your community lenders. Think about your credit unions, your community development financial institutions, your green banks at the local levels to be investing in the green economy. We are a proud supporter of JCF in their work to bring in new minority represented financial institutions across the country. So very happy about those 2 proposals. And then yesterday, for those of you who were following the Earth Day news out of the EPA, we heard President Biden announce the 60 winners of the $7 billion Solar for All competition, of which Connecticut was a winner of $63 million to support the deployment of solar and storage to the benefit of affordable housing here in the state of Connecticut. For those of us who are Connecticut stakeholders, we would all know and recognize that this market has been underserved for years. But as a result of the passage of Section 2 underneath Public Act 2148 in 2021, actually the affordable housing market was unlocked through that passage of that act. PURA, the Public Utilities Regulatory Authority, initiated a process that involved the Department of Energy and Environmental Protection, the Department of Housing, the Connecticut Housing Finance Authority, the Green Bank, HUD, and others to define what affordable housing means so that we can enable affordable housing to be a part of the Residential Renewable Energy Solutions Program. So building on that, of course, you've got all the tax credits that are coming in. We want to enable those tax credits along with the state's policies to flow into affordable housing properties so that the tenants as well as the property owners can realize all of those economic energy savings benefits, energy security and resilience benefits that come from solar and storage. And the Department of Energy and Environmental Protection was our steadfast leader in Project Sunbridge for that $63 million application. So we're excited to be a part of that consortium. And then I also want to report out that Inclusive Prosperity Capital, for those of you who have been here to our headquarters in Hartford, would know that we are co-located with IPC, which is a nonprofit that we co-created with DEEP, the Kresge Foundation, in 2018. They were the winner of a national award of $250 million to advance community solar across the country. So yesterday was another big day for greenhouse gas emission reduction investment in what I call underinvested communities. We need to enable more investment in low-income and disadvantaged communities. So great to be a part of this EPA program, and we're very much looking forward to working with all of you to mobilize multiples of private investment in these underserved markets so that our families and businesses can realize the benefits of that investment. Let's go to the next slide. So just for those of you who want to get some sense of the context, the policy underpinnings for the Greenhouse Gas Reduction Fund, this is just a recommendation for all of you podcast listeners. I've listened to both of these podcasts. I think they are fantastic. But of course, you've got David Roberts, who runs Volts, for all of you Volts fans out there. If you want to know really what the Greenhouse Gas Reduction Fund is all about and its predecessor ideas from the National Climate Bank, the National Green Bank, that has been an effort of the Coalition for Green Capital for 10 plus years. In fact, Connecticut Green Bank was inspired by the work of CGC in Section 99 of Public Act 1180. You should listen to the podcast by Reed Hunt that was done August 13th of 2021, literally a year before the signing of the Inflation Reduction Act. Reed sets a fantastic foundation for a vision of what the Greenhouse Gas Reduction Fund would become, whether it was the Clean Energy and Sustainability Accelerator or a variety of other names. Ultimately, it became the Greenhouse Gas Reduction Fund, the $27 billion. And then you've got, of course, Jockey Wise, who has been a leader at the EPA and the White House in advancing the Greenhouse Gas Reduction Fund. He, the day after the NCIF and CCIA announcements, was on Volts, and you get to hear Jahi's perspective in terms of what the policy expectations are for in terms of the National Clean Investment Fund, the Clean Communities Investment Accelerator, and Solar for All. Again, another fantastic conversation with David Volts. I would suggest that if anyone's interested in understanding the foundational public policy underpinnings of the GGRF, you should listen to those two podcasts. And then from there, you'll see why everyone's excited around the country about implementing the GGRF. So just wanted to set some of that context. The day after Earth Day, we're very excited. I think we will all forever remember Earth Day 2024 as the day for the Greenhouse Gas Reduction Fund, which is really about climate justice. Let's go to the next slide. And I think I'm going to turn it back over to you, Rudy, here.
Thank you, Brian. Yeah, thank you for those really important updates, very exciting news. All of us here are obviously very excited. And hopefully everyone listening to this is very excited too, and the roles that you all will play as we go forward. So we will now shift gears a little bit to talk more specifically about programs and offerings that the Green Bank provides. First, going to our solutions for homes. And I'm going to turn this over now to Ed Kranich with our Energy Storage Solutions program, so he can talk about some important updates for that program.
Thanks, Rudy. Can you hear me okay?
Yes, sir.
All right, thank you. And pardon me, I'm experiencing some Earth Day allergies right now, so if I have to clear my throat, I apologize in advance. I'm Ed Kranich. I'm Senior Manager of Incentives with the Connecticut Green Bank. And we're going to start with energy storage solutions. I know Rudy got us into the homes sector here, but energy storage solutions goes across both. So we'll talk about both for a moment here. So next slide, please. So before we get started, to all the contractors and developers and project owners out there, some very important deadlines and updates. So as you may have been notified by email from us a few times, all commercial and industrial upfront incentive approvals will be paused starting June 15th of this year. And we have a couple of very important deadlines. So if you are working on a project where the estimated upfront incentive will be over $500,000, which is probably about in the 2 megawatt range, the application, a complete project application request for incentive must be submitted by May 8th, 2024. Anything that's less than $500,000 in upfront incentive, less than 2 megawatts-ish in size, applications are due on May 22nd. And that's just to give us enough time to review applications and prepare materials to send to our board for approval. So if you have any concerns about these deadlines, please reach out to us as soon as possible. If you're a contractor in the process of getting approved, or if you have projects that you need to get through interconnection first, just communicate with us, reach out to us as soon as possible. So that pause will begin on June 15th for PURA to assess the incentive rates. We're not sure if it's going to result in them going up or down or staying the same, and the time frame for the review is unknown at this time. So unfortunately, we don't have a lot of great info to give you, but you can follow the 240805 docket with PURA, and you can keep up to date on this. Building off of what Brian Garcia had just said, so in this program, good reminder here, multifamily affordable housing qualifies under the residential side of things. So these deadlines do not affect affordable multifamily housing. So with that being said, next slide, please. So just some program process or progress updates here. So on the residential side, we've got about 3.5 megawatts approved, 6.5 megawatts in this current tranche remaining. Of the 10 megawatt tranche, we still have quite a ways to go there. So we have some good updates on the residential side. We've gotten a lot of new contractors and a lot of new equipment installed since the last meeting, which was, I believe, back in January. Since January, we've gotten equipment from Panasonic, Tesla just recently through Sonova. That includes the Powerwall 1, 2, and 3. More coming soon on Tesla for all other types of customers going through other vendors. But we're really excited to see some good traction coming from the third-party owners and from Tesla, especially in the residential world, because they're a pretty popular name. And on the commercial side of things, again, you know, we're still kind of sitting at about 38, 39 megawatts of approved projects, 60 to go. So again, those deadlines are going to be really important. Get your projects in, get them in on time so that we can get them reviewed and approved before everything pauses in June. And finally, I just want to plug our upcoming contractor trainings. So to be an eligible contractor, you have to attend at least one of these. And the next one is on Thursday at noon. If you can't make that one, the next one is on May 30th at noon. They're both on Thursdays, and you can sign up, register at the link below, and you can find it on the Green Bank website calendar as well. So with that, I will turn it back over to Smarty Loan.
Thank you, Ed. Yeah, a quick update on the Smart E-Loan program. I know, as I've said this other webinars in the past, no update on home solutions would be complete without mentioning our flagship home product, which is the Smart E-Loan. It's now in its 11th year and has helped nearly 8,000 families make improvements to their homes. In that decade or so, Smarty has focused on energy efficiency and renewable energy projects, upgrades including windows, insulation, HVAC, solar storage, heat pumps. There's a list of 50 or so different energy-related measures that have qualified under Smarty for that decade plus. Now the Smarty loan is starting to work towards incorporating resilience-related measures. This whole thing is under development currently, but in the near next few months or so, some of these new measures will be available for homeowners, and there'll be things related to water, residential wells, landscaping, and floodproofing. We're currently developing the technical standards behind the scenes and working to get contractors excited and engaged about these new offerings, since it is a new group of contractors that we'll be working with. So more to come on this in the future, and I'm sure we'll have an update likely at the next quarterly webinar to discuss this in some greater depth. So with that said, we will now shift to our solutions for buildings. And I will turn this over to Elise Buzzelli, the Associate Director of Financing Programs, to talk about our flagship building solutions program, CPACE.
Great. Thank you so much, Rudy. Good afternoon, everybody. So as Rudy said, today we're going to be focusing on the CPACE program and some new exciting additions to that program. So quickly, a refresher for folks on CPACE, which is on the next slide here. So what is CPACE? CPACE is a program, as Rudy mentioned, it's our flagship commercial financing program here at the Green Bank. It's also been around now for about 11 years, almost 12, I think, at this point. And it is an acronym. CPACE stands for Commercial Property Assessed Clean Energy. So really what that means, it's financing available to commercial properties for green solutions. So commercial properties include really anything that is not a residence or a municipal or state property. So commercial properties include things like office buildings, industrial facilities, retail facilities, etc. Also includes nonprofit facilities, as well as multifamily properties with 5 units or greater. All of those are considered commercial properties and are eligible to participate in the CPACE program. And we are able to finance green solutions through CPACE. And that's really what we're going to be focusing on today, are some new additions to the offerings that CPACE has. In the past, we've always been able to finance clean energy solutions, things that help to save money on utility bills. So renewable energy upgrades such as solar PV, as well as energy efficiency upgrades that save money on your bills, including lighting upgrades, HVAC systems, building management systems. But very recently, the statute was amended to also include EV charging infrastructure and resilience improvements under the umbrella of CPACE financing. So we'll get into that in more detail here in a second. But a couple of things that kind of set CPACE apart from other traditional financing sources for commercial upgrades. It's low-cost, long-term funding, so we can finance projects up to 25 years, depending on the equipment you're installing, which of course is a big difference than maybe the local bank down the street that can offer you a 5 or 10-year loan for your improvements. We're also able to finance 100%, up to 100% of project costs for eligible projects. And the way that the financing is repaid is through a benefit assessment that gets placed on the property itself. So very similar to any other municipal assessment that you can think of. So maybe think of if you participate in city sewer or city water at your home or business, the CPACE assessment works in the same way. So the loan is tied to the property itself, and therefore it stays with the property regardless of who owns it. So that's helpful, of course, for folks that are maybe thinking of moving their business to another location, but might not want to have to worry about paying off that full CPACE loan ahead of time. That's something that you don't have to worry about with CPACE. The loan will transfer along with all of those wonderful green solutions that were implemented. So that's a quick refresher on CPACE. And so if we go to the next slide here, we can talk about the addition of resilience. Great. So this is the definition of resilience that the CPACE statute refers to. I'm not going to read it verbatim here, but generally resilience is really it's the ability to prepare for and quickly recover from incidents or threats. The definition that we're using includes, but is not limited to, the impacts of climate change. So when we were working on kind of amending our guidelines to incorporate resilience into what the CPACE program guidelines looked like, we had to kind of take that into consideration. So if we go to the next slide, you can see, so when we put these program guidelines together, we had to kind of think through what did we want to focus on, and what did we want to kind of put forth as examples. So a few things that we really focused on, of course, as Brian talked about, our mission, are things like climate change adaptation and nature-based solutions. So what you're seeing here are a few examples of those things, so kind of thinking about it in real life. So if you're thinking of climate change adaptation examples that can be included as a resilience measure with CPACE financing, we're looking at flood management, things that have come about through storm events or extreme weather. So think of the tornado that tore through the middle of Connecticut a few years ago, or the more intense storms and threats of hurricanes, and of course things like sea level rise along the coast, and other climate change issues that we see more prevalently these days. And then we also have nature-based solutions. So these are a few examples of that. So think about things like that you may be able to include at your commercial property that would naturally make that property more resilient. So I'll pick out the pervious surfaces piece of it. So if you've got a big parking lot, let's say, that's serving your building, and you notice that there's a lot of runoff and maybe even some flooding due to the fact that you have kind of a traditional asphalt parking lot, something like including a pervious surface there, or pervious parts of that surface, might decrease that flooding. So that's an example of something that we could consider financing through CPACE for Resilience. And then if we go to the next slide, we've also included the ability to use a standard called Fortified, that is a program that's run by IBHS, which is the Insurance Institute for Business and Home Safety. So this is a resilient construction standard that was put in place. It's available actually for homes as well as for commercial and multifamily properties. But it's really it's a great standard, and it's one of the few that are available for resilience improvements. So this is something we incorporated into the guidelines, something that can definitely be followed in order to pursue financing for resilience measures. There's a few different levels here, fortified roof, silver, and gold. And we will include at the end of this, when we send around the follow-up, we'll include a link to the fortified program. But there are some pretty great levels and information in here regarding standards around resilience for building envelope improvements, roofs, and kind of the shell of the building, which is a really important way, of course, to make sure that your business can remain open in the event of a threat or incident. And then I think my last slide here, yeah, so just a couple of key things to note here. So the first one, if anybody is familiar with the CPACE program, you'll know that there is a statutory requirement for clean energy projects, so renewable energy and efficiency projects, that the savings need to be greater than the investment in order to qualify for CPACE financing. We call that the SIR requirement. But for resilience improvements, that has been removed. So resilience improvements are exempt from that SIR requirement. That's a big thing to keep in mind when you're thinking about resilience improvements. But all other standard CPACE eligibility requirements are still applicable. It has to be a commercial property. It needs to be in a participating municipality, and there is lender consent required if that is applicable, if there's a senior lender. It is available for both our retrofit pathway as well as our commercial new construction pathway. And the specifications of that are in both the new construction and the brand new resilience appendix that we'll also share with you all afterwards. One of the new requirements for resilience projects is that a resilience study with an assessment of cost savings needs to be included in order for us to consider it for financing. I did mention there's no minimum requirement, so the savings don't have to be greater than the investment. However, we do want to see that assessment of cost savings. So we want to see that you've looked at that and come up with some sort of an assessment of it. And one thing to note here as well, currently projects that are looking for resilience financing through CPACE can only be financed with a third-party capital provider. So the CPACE program is an open program. We have about 20 different private capital providers that are eligible to lend in the Connecticut market. The Green Bank is one of those lenders, but currently we're not financing resilience projects at the moment. So if you're looking to do a resilience project, it would be through one of our many capable third-party capital providers. And then lastly here is just kind of, I wanted to focus on what the resilience study includes. All of this is listed in the appendix that we will share, as I mentioned. But in terms of the resilience study, what we're looking to be included is an overview of the property. So, just information about the property itself, where it's located, some details about it. Identification of the vulnerabilities. So what are you looking to change? What's happening at your property? What's causing you to have to shut your business down for a week, if we get a major rainstorm. So all of those kind of lists of those vulnerabilities that might stop you from doing business and staying open. Then what your adaptation proposal looks like. So what are you going to do to fix that problem? Assessment of cost savings, of course, and then also an implementation timeline. If you're looking to do a fortified project, there are some different requirements that go along with fortified. They have their very, very set of standards that you would follow. So we would look for all of that backup documentation as well. We will also, I will mention, we'll be doing a kind of a more in-depth webinar on resilience for CPACE, probably sometime in May. So we'll be sure to make sure that that gets out there for folks to register for as well. But we're really excited to have this be a new part of the CPACE program and a new part of the Green Bank's mission as well. And so with that, I think I will turn it back over to Rudy. Thank you.
Thank you, Elise. Great updates there. More to come for folks on CPACE for Resilience. I'm going to turn it over now to David Beach on our investment team to talk about Green Liberty Notes.
Thanks, Rudy. And thanks all for joining. You go ahead and go to the next slide. So as folks have mentioned a couple times now, we celebrated Earth Day yesterday. Though here at the Green Bank, we're kind of making it a celebratory week and month. And we're all about fighting the planet all year long. And we know if you're attending this webinar, you probably care about protecting the environment the same way we do. So we wanted to provide resources to our supporters to help you make Earth Day last all year. And one of the great ways that you can do that is by investing in a Green Liberty Note. Our Green Liberty Notes function like a CD. You invest your money as little as $100. And then after a year, you get that money back and you earn 5.25% interest rate. That's the current interest rate on our issuance that is live right now. And by doing this, you're going to help us help Connecticut small business owners improve their energy efficiency through low-cost loans that they can actually repay on their utility bills. So if you're interested and want to put your money to work and help make Earth Day last all year long, I encourage you to go to greenlibertynotes.com. If you don't have an account yet, it just takes a few minutes to create one, and you can invest in as little as 5 or 10 minutes. You can also read more about the offering and how it works and the impact on that site. So do check it out. The one last thing I'll mention here is, in addition to just investing in a Green Liberty Note, we also put together some other resources as how individuals in Connecticut and across the country can do work to make Earth Day last all year long. So if you go to ctgreenbank.com/2024 Earth Day, so CT, the letter CT, greenbank.com/2024 Earth Day, you can again learn about how you can invest in a Green Liberty Note, but also see some of the other ways you can bring the spirit of Earth Day into your daily life throughout the course of the year. I'll be on at the end to answer any questions, but with that, I will hand it back to Rudy. Thank you.
Thank you, David. Yeah, we'll make sure that we send out links to those resources in our follow-up email this week. Now I'm going to turn it back to Brian Garcia for some closing thoughts.
All right, so just wrapping up here, just want to commend the team on all of those updates. Ed, on energy storage solutions, you know, for all of you out there who have family or friends or are a contractor, pairing battery storage with solar PV makes a lot of sense in Connecticut. Actually makes hundreds of dollars of savings a year instead of cents. But so definitely go out there and find the contractors to help you put battery storage in. If you're thinking about, you know, a leased or a power purchase agreement, a third-party owned system, you can take advantage of additional incentives from the Inflation Reduction Act. There are energy communities adders depending on where you live. There are low-income communities adders as well. So right now is the time to take advantage of not only the state incentives, but also the federal incentives. So lots of good contractors out there doing great work, delivering value to families and businesses. So thank you, Ed, for that update. Rudy and Elise, it's super exciting to hear about our flagship products in the Smarty loan for homeowners through our local community banks and credit unions, and commercial property assessed clean energy for all of our kind of non-single family property owners and non-state and municipal property owners to be able to have access to capital to not only finance clean energy improvements, but now resilience improvements. So great to see some of those things rolling out now as we confront climate in a number of different ways, not only to reduce greenhouse gas emissions, but also to increase our resilience against its impact because it's here. And then David, thank you as always on the Green Liberty notes. Now's the time, everyone. You know, every quarter we issue these notes, and your purchasing of the notes not only results in a return to you, but importantly is providing capital to small businesses in Connecticut that are pursuing energy efficiency. So by helping them, and we all frequent them, our small local restaurants, our local YMCAs, you know, all of our small businesses and organizations receive access to and support from Eversource through its Small Business Energy Advantage program. So take advantage of those programs for your local community facilities, but also invest in them through the Green Liberty Notes. Let's go forward one slide. Just a final thought, you know, being compelled to think yesterday about Earth Day, and David, what you said about thinking about Earth Day all year through a Green Liberty Note, I would offer a lifetime of Earth Day through the voice of Maya Angelou. If you all have not heard Maya Angelou's On the Pulse of Morning, you should listen to it. There will be a link to it following this presentation, but it is the inspiration to the Green Bank's vision statement, which is a planet protected by the love of humanity. We can't be environmentalists, or we can't have environmentalism without humanitarianism. So we're never going to be able to solve our climate crisis without loving and respecting each other first. Maya Angelou's message here on the Pulse of Morning is really, really compelling, and I would suggest or advocate to everyone to take a look at that and be inspired by her vision for a very promising country. It is back then and still to this day a seminal environmental justice poem that should inspire us all to better things. So let me leave it there, and Rudy, I'm sure we've got some question and answers that the team can take as we get into this section.
Great, thank you, Brian. Thank you to all of my colleagues for presenting today, and thank you all again for joining us. So if you have any questions, please do put them into the chat, and we will answer them as we go. We did have a question related to the Green Liberty notes. Just David, if you could jump on and give an update on how successful they've been so far. I know this is the 10th one, but if you could just shine a little bit of light into how those 10 have been, affecting the impact they've had.
Thanks, Rudy. Yeah, we've now raised over $2 million from 9 issuances, and the 10th one is currently live right now. That means we have repaid 5 Green Liberty notes, and everyone has been repaid and on time with their full amount of interest. And the program that these notes are supporting continues to thrive and grow. I am slightly limited per SEC regulations about how much I can tell you without sending you to our site. So if you go to greenlibertynotes.com, we have our offering documents. You can read a little bit more, but we have seen from the program that is supporting significant cost reductions for small business owners, as well as reduce carbon emissions by that decrease in energy use. Happy to answer more specific questions, but hope that helps.
That's great, David. Thank you. A question for Elise on CPACE and resilience. The question is, how are we considering electric or energy resilience with the expansion of CPACE? For example, things like backup generators, energy storage, smart electrical panels, things like that.
Yeah, that's a great question. So there is a lot of overlap. I think we can all agree between some things that may be considered an energy conservation measure versus a resilience improvement. But for the most part, the best rule of thumb is to think about, and certainly I would encourage you to read the technical standards section of our guidelines. It explains it pretty well there. But if a energy conservation measure meets either the efficiency or the renewable energy standard, then it would be treated as kind of a standard technical review, where it would be subject to that savings to investment ratio requirement. If it's something that falls outside of that traditional kind of energy category, then we would consider it under the resilience technical standards. But again, the guidelines really do a good job of explaining kind of what that line looks like. So would encourage you to read more about that through those, which we will share.
Excellent. Thank you, Elise. Yeah, we will send out links to those resources that Elise just mentioned, as well as a link to the recording and the slides. We'll post those on our website later this week and send out an email so folks can have easier access to all of those items. So I will pause here for just a short minute in case there are other questions to come in. But right now, I don't see any. Okay, well, as always, if questions or thoughts do occur to you, please feel free to email us at the email address that's on the screen, info@ctgreenbank.com. You can always visit our website. There are contact forms there, plus lots of information about all of these programs. So if you have questions or thoughts, please feel free to reach out. We're always available. So again, I want to thank you all for joining today. Thank all of my colleagues for their time presenting. and we will see you all next quarter.